All right, welcome to Coffee with Markus. It's episode 228. It's good to be back. I have been traveling a lot, but today we have a fun-packed show because we'll talk about what's happening in the markets. This will only take us 2 or 3 minutes or so, and then I want to explain to you the wheel option strategy in 15 minutes or less. Yes, on Saturday, I did a workshop for the Money Show in Las Vegas, in-person workshop, a mastery class, where I explained the three with the wheel strategy in 3 hours. And this was the longest time I've ever done it. So today I set myself a challenge to explain to you the wheel strategy in 15 minutes or less. So we'll talk about what is the wheel option strategy, how do you choose the right stock, how do you choose the right option, when do you take profits, and what do you do when the stock moves lower. I'll also show you my current positions, and then we will answer your questions. So put them in the chat right here and let's get started. Okay. So let's see what is happening in the markets. Let me bring up the charts here. Boom, as you can see, new layout, getting used to it. So we are looking at the S&P 500 and we are down 1.08%. But if you're looking at this does not tell the story of what happened. We need to actually look at the futures markets, and looking at the futures markets on a 5-minute chart, because look at what happened here. So yesterday, Sunday, we opened 3% lower, 3% lower. Then we went all the way up there. Today, at some point, we were positive in the markets, and now pulling back a little bit, the Nasdaq down 0.65%. So, but this here is a 4% swing. Holy cannoli! There is a lot going on. So what are the markets focusing on right now? It is definitely the Russia-Ukraine conflict and what is happening there. As a result, crude oil is jumping higher. I mean, it has pulled back a little bit, but as you can see, crude oil still up around 5% for the day. So pretty significantly, last week trading above $100 a barrel. We also have some movement in the cryptocurrency markets. Bitcoin today moving up 10%. So a lot going on. And as you can see, the VIX, which is basically the fear factor in the market, still at super high levels. Has been spiking at 40 recently, then last week spiking at 38 again. Right now still at elevated levels at 30.87. So if you're looking overall at the S&P last week in correction territory, meaning that being down from the high to the low here about 10%. Right now back above the correction territory, but the Nasdaq still in correction territory. Last week, already in bear market territory. Yes, we were down from the previous high, more than 20%, but snapping back right now, still down from the previous high, around 15%. So as you can see, a lot going on, a lot of movement. Is it time to panic? I don't think so, not yet. What we are seeing here right now is a normal, healthy correction that we usually have around once or maybe twice a year. We'll see. I believe that this year we will have a little bit more of a correction or longer corrections because we have a lot of uncertainty and the Fed raising interest rates. So a lot going on here, as you can see. Anyhow, this provides us some fantastic opportunities. And this is why right now I want to switch over and actually talk about the wheel option strategy. Okay, good. So let's talk about the wheel option strategy, a fascinating strategy, very, very popular by many traders. And right now, my goal is to explain to you this strategy in 15 minutes or less. So we will very quickly talk about what is the options wheel strategy? How do you choose the right stock? How do you choose the right option? When do you take profits? What do you do when the stock moves lower? And again, all of this, hopefully, fingers crossed, in 15 minutes or less. So let's talk about the wheel option strategy. What is the idea here? Well, number one, first of all, you are selling put options, and for doing this, you're collecting premium, and you collect premium. Now, I will talk to you exactly on what stocks we will sell this put option on and what options we will sell, but this is the general idea. Now, if on expiration date, the stock is trading below the strike price that you have chosen, then you might get assigned. So you might or might not get assigned the stock, meaning that you have to buy the stock. So assignment means that you need to buy the stock. If yes, then we move on to step number 3. If you do not get assigned, we move on to step number 1 again. So what is step number 3? This is where you sell call options and collect premium. So as you can see, it's pretty straightforward. It is pretty simple, and I have a more comprehensive video on this. I'll link to it later in the description. So, but let's talk about when you do this. The key, the really key is step number 2 and step number 3, choosing the right stock and choosing the right option. So let's talk about it. How do you choose the right stock? And the idea here is to choose value stocks. Yes. Growth stocks? No. So how do you find value stocks for this particular strategy? Well, let me show you how I do it. And again, I'm just here sharing my variation of the wheel strategy with you. As you know, there's many, many variations out there. And I just want to share with you what works for me, what I am trading here right now. So we'll talk about the value stocks. We go over to Forex Optimizer. One of the stocks that I traded today was BAC, Bank of America. So this is where I like to go to finance.google.com, or I believe google.finance, you get the idea. Look up Bank of America, and there's a few things that I'm looking for. The first thing is I want to see, do they pay a dividend? Because when they do a dividend, usually value stocks are paying a dividend. Growth stocks are keeping all the money to reinvest in growth. I want to see that the PE ratio is relatively low, but most importantly, I want to say that the company is making money. What you see here in green is the revenue over the past 5 years. As you can see, 2017, 18, 19, 20, and 21. As you can see, the revenue of Bank of America steady at a high level here, around $90 billion. The orange column here is showing the profits. And we see that Bank of America has been profitable year over year. Yes, we did have a dip in 2020, but hey, most companies, most value stocks did have a dip in 2020. Growth stocks were exploding. So this is what we're looking for here. Now, let me show you another example of more of a growth stock. So we're looking at a company like Peloton, for example. With Peloton, we'll see, of course, they don't pay a dividend. They don't have a PE ratio because they're not making money just yet. And if you're looking here at the annual growth, you see that they have been exploding in growth, going from what, a few $100 million to $5 billion, $4 billion in sales, but never making a profit. In fact, in 2021, the profits have been even decreasing, or the losses have been increasing. So these are the 3 criteria that I look for in growth stocks. So I want to see they make money, they have moderate growth, not crazy growth like Peloton here. They typically pay a dividend, and the PE ratio, which is the price to earnings ratio, is rather low. Now, one more thing that I want to see when picking the right stock, I want to see that on a chart, on a technical chart, the stock is in a sideways range. What does this mean? Well, if you take a look here at Bank of America, let's come back here, you see that Bank of America kind of have been trading sideways over the past few months. So this year is October. Right now, as we're recording this video, it is February. So here we see that the stock has been trading sideways between, I want to say, around $43 to $50. So this is what I'm looking for. I don't want to trade a stock, for example, here like Zillow. Let's just jump to another one that has been in a prolonged downtrend here. Or let's maybe take a look at, I'll take a look at a few others here. So here also wild swings. I do not like these wild swings, but I definitely like a value stock that has been recently rather going sideways in a sideways range. Because as you'll see here, in a moment, we are benefiting if the stock either moves significantly higher or slightly higher or sideways or slightly lower The only trouble that we have is when the stock moves significantly lower. And this is where we'll talk about what to do when the stock moves lower in the last section here. Okay, so how do you choose the right option? Okay, so one final comment here regarding the stocks. Only choose stocks that you want to own. Why? Because step number 2, you might get assigned. This means that you have to buy the stock. Again, I'll show you very specific examples here in just a moment. And so an example here is Bank of America. I don't have a problem owning this. Let me give you a few other examples of a stock that I traded today. And the stock that I traded today was Boeing. BA, the symbol here, and Bank of America is BAC as the symbol. So now the question is, how do you choose the right option? Well, first of all, we already know that we want to trade a put option. And when it comes to the right option, we need to look at the expiration date. So how many days to expiration? I'm abbreviating this with DTE for days to expiration. And we need to talk about the strike price. So for me personally, and again, there's many variations of the wheel strategy and everybody's trading it slightly differently. And this is what I really love about the wheel strategy, because the wheel strategy allows a lot of flexibility where you can tailor this strategy to your needs. For me, the expiration date is a maximum of 2 weeks. And here is how I choose the expiration date. On Monday and Tuesday, I'm choosing this week's expiration, which means that with this week's expiration, I only have a few days, which is 4 to 5 DTE days to expiration. On Wednesdays, when I'm entering a trade on Wednesday, I'm looking at this week's and next week's expiration. So this means that I have here anywhere between 3 days to expiration to 9 DTE. And then on Thursday and Friday, I'm typically looking at next week's expiration. There we go. Which means that I'm typically looking here at around 7 to 8 days to expiration. These are my rules of thumb. Will I trade a stock on Thursday that expires the next day? Maybe. So this is where I might consider taking a trade here. But these are in general my rules of what I'm doing, what expiration date I am choosing. Now, the strike price, this will be the price at which you have to buy the stock. So you have to ask the question, do you want to own the stock at the strike price? And in order to do this, I want to look for a strike price at a support level. And I'm looking for a rather short-term support level. So the support level that I'm looking for is the lowest low of the past 8 weeks. So why so short? Why do I only look back over the past 8 weeks? Because as you can see, my horizon for this trade is rather short-term. It is anywhere between 3 and 9 days to expiration. So therefore, I don't need to look back over the past few years. It is okay if I look back over the past 8 weeks. So let's take a look at a stock here. So here, for example, BAC, the blue line that you see here, is actually the lowest low of the last few weeks. So here we see that the lowest low, let me just take a look at it, is $43. This means that for this particular example, I want to choose a strike price of $43 or below. Let's talk about Boeing, another example here. So Boeing is a stock that I traded this morning, and as you can see, the lowest low of the last 8 weeks was 190, and that is actually, let me just quickly see, I traded today the 185. So I want to choose a strike price that is at the lowest low of a stock that is moving sideways over the last 8 weeks or below. Okay, so let's move on. Is when do you take profits? Do you take profits at all? And this is where I like to take, I buy back the option, both calls and puts, when I see 90% of the max profits until the day before expiration. So let me give you a very specific example. So BAC, Bank of America, I sold, let me just see, the 41 put for a total here of 23 cents, which is $23 per contract. So this means, and the expiration here, put expiring, this is on March 4th, on Friday. It turns into 3/4. So on March 4th for 23 cents. So this means I would buy back the put for 2 cents on or before March 3rd, right? So on or before. I usually don't like to do this on the last day of expiration, then you might as well let it expire worthless. So this is here an example for selling a put. This is for Bank of America. Let me give you an example. There we go. An example for a call. So as an example, I did on, let's see, on ADI, I sold the 162.50 call expiring March 4th for $2.71. So this means that I would buy back the call for 27 cents on or before March 3. Haha, I'm abbreviating it that it all fits in one row. Okay, is this making sense thus far? Is this helpful at all? If it is, do me a favor, give me a like, and we will move on to the question of all questions. What do you do when the stock moves lower? So there's several ways, and there's several ideas that you can do, that others do, and then I'll tell you what I'm doing. So some of the ideas is you could actually roll your put to avoid assignment. I don't do that. I don't like this idea. So for me, that would be a no. What I like to do, and again, it is up to you, I like to fly rescue missions. And I want to talk about those for a moment and say, okay, what does this mean, these rescue missions here? This is where I sell more puts when the stock dropped by around 30%. And what is the idea here? The idea is to get assigned and therefore lower your cost basis. What is the cost basis? Well, this is the price at which you're selling the shares for. So basically, the idea here is a cost averaging. And you might agree with this concept, you might not, that's up to you. Especially when you chose the right stocks that are value stocks, I believe that you can average down your cost. However, if you're not comfortable with it, by all means, do not do this. What I'm doing here is that I'm not rushing in with a full position. So I'm flying these rescue missions, in 1/3. What does this mean? It means that if I committed $100,000 in buying power to the original position, in this case, Bank of America, in this case, I would commit around $33,000 to each rescue mission, and I would fly up to 3 rescue missions. I know that I'm doing it a little bit abbreviated here because I promised you that I want to tell you this strategy in a nutshell in 15 minutes or less. So if you do want to know more about rescue missions, I do leave a link in the description to a video that I did where I explain these rescue missions in more detail. Anyhow, my goal here for today was to show you the wheel option strategy, to give you a broad level overview in 15 minutes or less, so that you can decide whether this is a strategy that you want to learn more about, or if this is a strategy where you say, this is not for me. And I mean, this absolutely your discretion. You are the trader. You are the captain of the ship. You are the pilot of this plane. You decide what you want to do with your money. This is one of the strategies that I trade. This is the way how I trade it. There's many ways to trade the wheel strategy, and you might find more information about this. If you are intrigued by the way how I trade it, I have a book for you that is called The Wheel Option Strategy. I'll link to it in the description. This way you find more information. And I also did a longer video, around 45 minutes, on the wheel strategy, where I show you in detail and many, many more examples of how I do it. Hope that this overview helps. If it does, take a look at the other videos that I'll link to you, probably right here in the description, and then I will see you in the next video. All right, don't go anywhere, because, of course, we will answer your questions, and then we will take a look at the positions that I'm in here right now. Just wanted to see, is this helpful? I know that you are probably already knowing the wheel strategy inside out, but for somebody who doesn't know the wheel strategy, I thought it would be good to see a very quick overview before somebody goes into a massive tutorial. And you see, maybe even for you who you are already familiar with the wheel strategy, but sometimes it's good to just take a step back, right, and get the 30,000 foot view and say, okay, what are we doing here? So as always, I'll make these notes available. Just contact the team, and they'll let you know how to get these notes. If you want to have them, it's basically, let me just quickly jump over back to the notes to get an idea how many pages have I written here. And it's exactly 2 pages. So it's pretty cool. You could print it out double-sided, laminate it if you wanted to. And then this way, you know exactly what the wheel strategy is all about. And if you are trading the wheel strategy and you have somebody who wants to trade the wheel strategy, where they say, okay, what exactly do? You now have the Cliff's Notes. Okay, good. So look at this. I have a new layout here that I can take a look at your questions. And that's what I want to do here really quick. Take a look at your questions before we move on and then actually talk about my current positions. So yes, Chris, hope that all of our portfolios are green, green, green. That is the plan. That is the idea. Well, we'll take a look at my portfolio here in a moment so that you see exactly of what's happening. Bondi Bites. So both my kids have been sailing, and they did really, really well in the sailing regatta. So it was a national sailing regatta. There were 124 boats, and in the silver fleet, they placed 3rd, which is a phenomenal result, considering that typically my kids do not sail together. So that is fantastic. Jim is asking the same. So it was great. It was actually really, really good. Okay, Jim says, I also do the same day DTE, sell a put Friday morning and make a quick 1-day trade, mainly on rescue missions holding. You see, last year, was it 2021 or was it 2020? I did more of the 1-day trades, and recently I've shied away from the 1-day trades because you're still assuming all of the risk, even though it is just a 1-day trade, or here in this case, Jim, what you're mentioning, it's basically 0 DTE, right? So a 0 days to expiration trade. And sometimes you can get blinded by the percentage where you see, oh my gosh, I can make 80% annualized on this. But in order to realize the annualized percentage, the idea is that you can do this trade over and over and over again. And I think these 0 DTE, these 0-day trades or 1-day trades, every now and then they come along, but they are not really very consistent that you could do them every single week, right? And this is why I stayed away a little bit from them. And I also think if you're new to the wheel strategy, just stick to the general rules, and then you can add these as trades where you say, oh, yeah, grab a few $100, or depending on your account size, a few $1,000s in a day. That would not be bad at all. Geldkapitän, did you arrive safely home? Geldkapitän, we met last, he was visiting actually the Traders Expo and Money Show in Las Vegas, and we met there and we had a great, great time. Okay, so Jeff said, in a large drop of your value, worst case, do you close the trade out at a certain percentage in case it continues sinking? You see, this is one of the things that you can do. So going back to these ideas here, let me just do that. So what do you do when it goes down, right? You can either roll your puts, or you can just close the trade for a loss or move on. And again, what I like to do, because most of the time, not always, and we'll talk about my trades here in a moment, but most of the time I'm selecting value stocks where I'm okay. And Probably in the next coffee with Marcus, or maybe in the one afterwards, I'll walk you actually through a trade step by step where I was down at some point at $20,000, $30,000, $40,000, and then it turned all the way around. So, Jeff, I think it is a possibility. It's something that you could do if you're more comfortable with this. I do not do it. I fly the rescue missions and then I hold on to these trades, and some of them, the short-term trades, become longer-term investments here. But great idea. Okay. So Bonnie Bites is, what is the reason to buy back the put versus letting expire if you're confident that it expire worthless? Well, you're basically freeing up buying power, right? I'll show you here a trade that I did today, where today I was able to buy back the put that I sold within an hour, a little bit more than an hour, less than 1.5 hours, right? And this frees up a lot of buying power. So you're taking money out of the table, and the buying power that you locked up for the trade is suddenly available for another trade. So this is where I say, if I can do this before expiration, right, then I could enter another trade because now I freed up some of the buying power, Bondi Bites. Does this make sense? Of course, if you think that the markets are not doing anything and that there's no opportunity, you might as well consider letting it expire worthless. But think about the markets right now. I mean, they're so volatile. I believe that this week, every single day of the week, we will have an opportunity to sell puts. So if you can free up some buying power by taking 90% of the profits off the table and entering another trade, I do believe that this makes a lot of sense. All right. Derek, it's a different question. Does the Russell 2000 have futures? Yes, it does. It's not traded at the CME group. I mean, the Russell contract, it's called, the symbol is TF for futures, and it has been bouncing around of various exchanges. It's like the stepchild that nobody wants, apparently. So I don't know where its home is right now, but yes, the Russell 2000 have futures. Don Vio, at what point do you enter phase 2 and 3 of your rescue missions? Well, I want to see that the stock drops any further and that I see some more solid support here. Let me actually show you here an example of LVS. And so what I did at LVS, and I'm going to share my screen here. So here's LVS. Originally, I was assigned at 58. Then I took the 58. Let me just use my handy-dandy calculator, which doubles as a phone, which is fantastic, right? Or you can say it's a phone with a calculator, whatever you want to choose. This is where I flew a rescue mission at 41. So I originally got assigned at 58, flew a rescue mission at 41, and as you can see, it kept falling. So the next rescue mission then I did at 36 when I saw some bottom here, 36, and I believe at 35. I sold some puts here. So this, after the first one, you're basically looking at, okay, when does the stock have the next level of support? And you don't want to make this too quickly. You want to give the stock another 20%, 15 to 20% that it could drop, but then you can start considering rescue missions. Is this helpful, Don? Okay, good. So have you ever traded VXX in the wheel? No, and I would never do that. I would never do this. And let's just talk about this for a moment before we talk about my positions here. But if you take a look at VXX, so this is an ETF that is constantly being adjusted to the downside. So right now you might say, oh my gosh, it is trading at $24. It cannot go below 24. It cannot go below 0. Wrong, because they have reverse stock splits. Look at this. Because of these reverse splits, at some point, this thing has been trading at, what is it, 5 million or something like this? Or is it 500,000? No, it's 5 million. And you see how it's being constantly adjusted to the downside. So this is where it's very, very dangerous if you're trading some of these ETFs, because these ETFs, they are doing reverse splits. You see here was a reverse split, and the split was 1 to 4. So this is where it's suddenly being adjusted to the upside, and therefore you can lose way more money than you think. So if here you would just sell the 20 put and say, okay, worst case, I'm selling some more at 15 and at 10. Well, if they are doing a reverse split, the 20 becomes 80, and then you're chasing it down. You see how the VIX basically has been constantly falling over the past 5 years, the VXX. So don't do this. I mean, it's a great question. It's a great idea because there's lots of volatility in there. But do not do that. So Mark says, how does the 2% per position work with the wheel strategy? 2% of what? 2% does not work with the wheel. So the 2% is a good rule of thumb that you use 2% of your account as a maximum that you want to risk. And with many positions, that is possible. With many strategies, that is possible. With the Power X strategy, for example, it is possible. With the wheel strategy, it is not. Stefan says, do you trade options on futures as well? No, because I think that's kind of crazy. You see, futures are already leveraged contracts, and then you're trading leveraged contracts on leveraged contracts. I mean, this is where, it sounds like a recipe for disaster. It's like almost when you're strapping a Ferrari to rocket fuel or something like this. You get the idea, right? I mean, this is where it gets really, really, really dangerous. So I do not do that. Okay. So how does the margin work with options since there's no margin of options? Well, I did a video on this that is called Trading with Margin, and this is where I explain how it works with options versus how it works with stocks. So take a look at this. I'll link to it in the description here, and I will. This will be probably super helpful. Okay, so 1 second. Let me actually show you my current positions, and then if you have any other questions, just post them right there, and we'll answer more of your questions. But I also want to show you what I did today. So in order to do this, we need to jump back to the screen, to the PowerX Optimizer, and look at some of the trades that I did today. So I already used it here as an example. So Bank of America, traded Bank of America. And here, what I did is that I sold the 41 put for not 19 cents. I sold it actually for 23 cents. So I'm making this a little bit bigger for you to easier to see. So this gives me 41% annualized. It allows the stock to drop by 6%. And the expiration is Friday. So right now the markets are closed. So we have 4 more days to expiration. So this here was a very nice trade. And as you can see, 41% annualized. We got to talk about Boeing because, geez, this was a fun trade. So let me just bring up Boeing here this morning. And Boeing this morning, I just want to first look at a daily chart here. So at the daily chart, you also see Boeing has some solid support here at around 185. You see it right here. We could probably, let's see, put a horizontal line right there. There we go. Is this a horizontal line? Yeah, you get the idea. At around 185. That wasn't the best. I need to change some of the settings here. For talking at the money show, I changed my settings because I had to use a white background because of the projector size. Anyhow, so this morning, if you look at a 5-minute chart, so this morning Boeing was dropping, it was gapping down, right? So there was an opportunity to actually sell, as you can see, the 185 for $1.05. So this would give me 41% annualized. And as you can see, Boeing was rallying after this. It was rallying after this. So I was able to already buy this back. And this is where it comes back to the question that I had earlier. So I bought it back for 30 cents. Now, this is not the 90%, but if in an hour and a half you can make 70 cents here, I mean, that's pretty good money. This is where the market is handing you money on a silver platter. Right? Not only on a silver platter, on a gold platter with diamonds all around. And there's the money there. And the market says, please take it from me. And when the market says this, you don't say, no, that is not enough money. No, it definitely was enough money. So this was a 90-minute trade. It very, very rarely happens. But if you look at Boeing and of what happened here with Boeing, we had a move here throughout the day. This is a solid 5% move that Boeing moved. So this is where it was possible to take some money off the table. Then there's one more trade that I consider a little bit more aggressive, and this is United Airlines. So on United Airlines, I sold the 40 put. So if you're looking at United Airlines, we see that there's actually some good support here. Let me just go on auto. You see there's some solid support at around 40. And I do believe that the airlines might be hurt over the next few weeks as oil prices are skyrocketing. But when I put it in the calculator here, I saw that there's a possibility. Let me see. I sold it actually for 25 cents. So for 25 cents, this means 46% annualized, expiring on Friday with 4 days to expiration. and it's the 40, and I'm okay if I'm getting assigned here in United Airlines. There's no earnings coming up anytime soon. So if you look at the earnings, UAL, I believe it's in what, 49 days for now. So that should be good. And as you can see, if you're looking at a 5-minute chart here, we also see that at first it was pushing lower and then was trading higher. So I'm already up on this one. I'm up around 20% on the option. So not the 90% that I'm looking for. And on BAC, on Bank of America, I'm up 43% on the option here. Now, a few other trades. So let's talk about the two different portfolios. So let's start with the Tastyworks portfolio. And today is the last day of the month. So depending on when I get the account statements, I might actually in the next Coffee with Markus or in 2 Coffee with Markus from now show you exactly of how I finished February. And as you know, February was kind of a crazy month. And so I have 2 accounts that I'm trading right now. One I'm winding down, which is the Tastyworks account. There's ARKF in there. So ARKF, solid day today, $2.68%, not $2, 2.68%. So it was good. I sold, my cost basis here is 47.50. I sold several times already the 28 put as by partial rescue mission. So this is what we just talked about. So I'm flying a partial rescue mission here at 28, have not been assigned, so being able to collect premium a few times. LVS, as you can see, the cost base is at 46.86. We are pulling back a little bit. LVS has been fun to trade this year. I've been able to sell a bunch of calls here at the 47 and the 48 level, above of my cost basis here. Today, LVS was pulling back a little bit, and we'll see. It seems to be very solid in a range between 42 and 46 here. 47 maybe. So I'm very happy with this. I just need to wait a few days. I couldn't sell anything today. Right. My friend, right. They had earnings today, and earnings at first came out better than expected because they burned through less cash than anticipated. But they also said, when they said that they will produce the truck, however, the outlook was 500 this year, 2,500 next year. And first I thought it was a mistake, and they wanted to produce 25,000 next year. But no, they said 2,500. And the initial reaction today was first that, oh no, this is not good. Towards the end of the day, some buying stepped in here. So this is where after earnings, you know that usually you have a first day reaction. I mean, see other companies that have an initial reaction, like, for example, Netflix, right, and Facebook. And then over the next few days, you see what analysts really think about, analysts and investors think about it. So I am talking to my head coach, Mark Hodge, about the next steps here, what we want to do with Ride. I'll keep you posted and let you know what I'm doing here. No action for me today. Of course, I was hoping for a much better earnings report. And again, when they read the earnings report earlier this morning, at first it did look good. So that was okay. Zooming in here a little bit. And also that they will produce the truck. But again, the outlook, and this is what it's all about. We are not trading the history, we are trading the future. So this is where often we want to see the outlook of a company was not as good as I had hoped it would be. So these are the 3 stocks that are in the one portfolio. In the other portfolio, in the Tradier account, I have ADI, was assigned at 162.50. Already sold some calls last week that are expiring this week for the 162.50. So nothing to do there. This works really, really well. I did have CLF until Friday. On Friday, this got called away. So CLF, fantastic. I need to tally up. I will tally up all of the profits here of this. But this has been a fun stock to trade. This, by the way, a stock that at some point was down $20,000. Did not fly any rescue missions there because it wasn't down at least 30%. This would have been around, 14. So it only moved down to around 16. And then, as you can see, it was possible to sell a bunch of calls here again and collect a lot of premium. And then on Friday, I decided to be done with it and let it get called away. We already talked about Boeing. We talked about BAC. We talked about United Airlines. So the last stock here, or the ETF, is IWM, got assigned at 205. Actually, I think I marked it here. So let's just jump over here. IWM. I thought that I wrote it down here. I need to. Okay, got assigned here at 205. And this has been fun to trade. I currently have a call at 205 that I sold So nothing to do here right now. If by Friday it closes above 205, I'll get called away. I might consider rolling this call into the next week because I'm okay holding IWM for quite a while. So this is what's going on in my portfolios right now. These are the 3 trades that I traded today. So again, the 3 trades today were what? BA, Boeing, BAC, Bank of America, and UAL, United Airlines, still in the portfolio. In the one, ARC-F, LVS, and RIDE. In the other one, ADI and IWM. And again, over the next few days, I'll give you a summary, if you want, of what happened here in this account for February. I just have to wait until I get the account statements, because then it's easier for me to just double check if everything that I've written down in my trading log is consistent with the account statements that I have. All right. Cool. So this is what has been happening thus far. John is actually asking, if you're assigned, what's the reason besides selling only a limited of number of puts to lower the cost basis, especially if the market is down? What do you mean? If you're assigned, if you fly a rescue mission, John, is this what you mean? So because when you're flying rescue missions, you never know if this was the bottom right now. So you want to keep some powder dry. This is why I like to do it in a third, and a third. And you see, for example, in LVS, I only flew 2 rescue missions. In ARC-F, right now, I'm trying to fly my first rescue mission. In RIDE, I did fly 3 rescue missions. But you see, you never know how much further the stock falls. And therefore, you want to keep some of the powder dry and not just go all in. That's my rationale. And again, John, this is where it's up to you. Yeah, right? There's so many ways to trade the wheel strategy, and you might be so convinced that this is a value stock that you actually fly a rescue mission maybe with a half and a half, right? I mean, this is a possible variation if you choose to do that. Just make sure that you test it first to make sure that it's not getting you in trouble. It definitely requires more buying power, but I mean, I've talked to traders who say, okay, in my account, I'm reserving 20 to 30% of all of the buying power for possible rescue missions. You could reserve up to 50%. All of this is possible, right? So that's where it's up to you. I'm just showing you what I'm doing, and I'm not saying that this is how you must trade. If you don't trade this way, then you will never make money. I'm just sharing what works for me, and I mean, pick the elements that work for you, that resonate with you, and stuff where you say, no, this is not for me. Well, then don't incorporate those in your trading. Just do what makes sense for you. Okay. Good. What else do we have? Claire says, when did we begin trading ETFs? We have been trading ETFs for quite a while. I mean, not only IWM. I don't know the last ETF that we traded. I would have to look it up. But I mean, ETFs. Oh, yeah, I traded probably XLF, I believe, JETS. Let's just jump over here to the screen again. Where is my screen share? There it is. So I believe that I traded JETS, which is the US Global JETS ETF. So today I liked UAL better than JETS, but that's an ETF. I believe it was XLM. No, XL. I don't know. XLB. I think I traded XLB, the material sector. So this beautiful ETF. So yeah, I mean, you can absolutely trade ETF as long as you do not trade leveraged ETFs. I'm staying away from leveraged ETFs. Okay. Does it make sense, Claire? Okay, Dennis. Yes, it's good to be back in the studio, be talking to you, being here. Wonderful. Okay. Hey, I hope that you found it helpful. If you did, please do me a favor and share this video with as many people as you think would benefit from this video. Also, on your way out, click on like. If you're new to this channel, consider subscribing. Click on the little subscribe and the little bell. This way you get notified whenever I go live. And I'm going live, or usually we go live 7 times a week with the stock market update and the Coffee with Markus, or that recently has been Coffee with Mark. And I think that Mark did a phenomenal job filling in. I mean, my absolute favorite episode of the past, probably the past year, was the episode that Mark did previously to this one, right? About where I did the analysis of what happened to SPY. When it had a down day or a down week. That was amazing and fantastic. Love this. If you missed it, just right now, I'll link to it in the description, and we probably also have it pop up there. And then I will see you in the next stock market update or Coffee with Markus. Take care and have a great day.